My name is Spencer Rolls, and I'm here on behalf of Legacy Family Office Private Client today. And I'd like to welcome Alfred Lam to our call. We're very pleased to have Alfred here. Alfred's the Senior Vice President and Co-Head of Multi-Asset Management for CI Global Asset Management. Alfred, you specialize in portfolio design, asset allocation, portfolio construction, and a bunch of other things. Alfred holds his CFA and his MBA, amongst other designations and expertises. You've been doing this for almost 25 years, I think now, Alfred, so almost a quarter century, hey? Good.
Actually 26 now.
Okay, well, you're over a quarter century. Very amazing. Those years are just zipping past. And I will say that Alfred, he's won multiple awards along the way doing this work. He's one of our favorite people to talk to because he's always got a unique viewpoint on things. And back in January, Alfred, you joined us for an amazing lunch session. You provided a bit of an economic update and outlook on what the markets and economy might do this year and beyond. And incidentally, quite a number of those predictions came true. So thank you for that. That was very helpful in our conversations, and I know it helped a lot of clients and COIs that we work with. But here we are now, almost 6 months later, and you've graciously agreed to have a follow-up chat with us about kind of where things stand today. And a number of our clients actually wrote in with questions to that point. So I was hoping we could ask a few of their questions today, get some of your feedback and thoughts on things, and be able to share that knowledge with our clientele. Is that okay with you?
Absolutely.
Wonderful. So to get started, first off, I'll say one of our clients, Michael, wrote in. I'm not going to use last names here. We'll just let you know that Michael wrote in, and he says, despite the U.S.-Iran war, the constant threats of inflation, gas prices, groceries, markets continue to reach all-time highs. So Michael's question was, how long can this continue?
It probably can continue for a while. Before the earnings came out, a lot of people had concerns, whether it was the war, inflation, unknown about interest rate policies because of the war, higher oil price and inflation, of course. That was before the earnings, and then the earnings basically destroyed all negative expectations. Okay, so if you look at S&P year-over-year earnings growth was almost 30%. The Max 7, i.e. pretty much the largest 7 companies in US, they grew almost 60% year-over-year.
Wow.
So people were amazed by these numbers, and these are all valid numbers, okay? So these are not like financial engineering numbers. These are real earnings. And at the end of the day, a lot has to do with the AI, which is not economic related. It's just because we have the tool, we have made some breakthroughs. So you notice that Google earnings were very strong, Meta earnings were extremely strong. However, after the earnings, there were people that were concerned about they have to raise capital, but it's not a huge deal. The amount of money they are raising versus the market cap, those are not big deals. But the media likes to print a negative picture. But overall, the reality is the earnings were very, very strong, and that made people very surprised. And if you look at prior to the actual earnings, there were noises. The markets were expensive, and that also got destroyed because you thought markets were expensive because the earnings were underestimated. Okay, so when we had a 30% year-over-year earnings growth, and the earnings came 10%, 15% above consensus, that means people were too conservative with the earnings. So when they were too conservative about the earnings, the valuations, which is expressed price versus earnings, that ratio was inflated. Now you put in the new numbers for earnings, all of a sudden the markets look a lot cheaper. So there was a catch-up rally since April, and the markets did not wait for the war to end to start rally because there's really strong fundamentals regardless of the war, regardless of central banks, whether they raise interest rate by 50 basis points or inflation go up by 1%. It doesn't really matter because the earnings were way too strong. Imagine it was 10% above consensus, and it was like 30%, almost 30% year over years growth. So if you build in a 1% inflation, you build in a 0.5% interest rate, these numbers are still dramatically better than people expected. So people focus on the fundamentals, focus on the earnings again. I think that is pretty healthy. Unfortunately, we were in a period that, like, if you look at the S&P for the last 6 months prior to this rally, it was flat while companies were doing amazing things.
Hmm.
Because it was held below potential for so long, the spike was very dramatic, and that obviously caused some people to say, "Oh, this is a bubble. This is too fast." But they did not notice that the earnings were very strong, and also we haven't had a rally or even grow for the last little while. So this is, in my opinion, rather than a bubble, this is more a catch-up rally, and it's legit. Okay.
Good.
Yeah.
Beautiful. That's great. Thank you very much, Alfred. I'm just going to do one thing here. Here we go. Let's see if this works. Does that work better? No.
Okay.
We're going to go back to the original view. Okay. Good. So on that note, I mean, a lot of what you talked about there was sort of centered around the Mag 7, and they sort of outperformed expectations from an earnings standpoint. And a lot of that sort of is on the back of AI, and we'll come back to that a bit later. But while the focus has been there, some of the other investments in climate and environment have actually had a really great year. And I think that's flown under the radar. And this is from Jacqueline. What's the outlook, she wants to know, on that space, on that climate, environmental space, especially with, president in the States who maybe isn't focused on that area? We're still seeing great performance there. Is that a surprise to you?
So climate has a lot related to technology advancement as well. So it's not just uh, um, solar energy, is also the popularity of electric vehicles, for example. So if you look at a lot of funds, one of the top holdings is the battery company that is based in China, and demand continue to be extremely strong for high quality battery, like the battery that can deliver more range for cars, and we're generally in a big transform from gasoline cars to electric vehicles, and obviously that is a clean energy theme, and in addition to that, like a data center needs a lot of electricity, so nuclear power plants, those stocks have gone up a lot. So again, it's all technology, and we are in a world that we try to use technology to make people's life better. Okay,
Yep.
so for example, like I have a Tesla. Okay, I'm not trying to promote Tesla, but why I like the Tesla is basically with a press of a button, the car drives me to work, drives me to home. So effectively, I have a driver. Imagine like in the past, if you have to have a driver, it's like a 70, $80,000 a year in terms of the cost to hire somebody. Now I pay $100. I have that lifestyle. So technology is giving people the lifestyle that in the past you can only imagine because it's so expensive. Okay, so we continue to have like these type of developments, and they are highly valued by people. And as such, like people that invented these things, uh, they they make a lot of money, and you and I were trying to participate through investing in these type of companies. So I think we are in the technology boom. There's going to be a lot of changes, not limited to EV, not limited to energy, but think about like a drug development, like Eli Lilly, for example, is spending a lot of money on AI trying to uh, fast track drug discovery. It is widely expected that a lot of chronic illnesses will be cured within a decade. So that is amazing, right? And people
Wow.
live longer. People don't have to suffer. They are healthier. They can enjoy life. So this is a fantastic time. Okay, like not just because of we are trying to be cleaner, but technology is taking our lifestyle to a whole different level.
Okay, wonderful. That's fantastic. So just sort of taking that thought about living better, a lot of the conversations these days are around the state of political affairs in the world and whether that's making the world a better place or a worse place. And we had a number of questions, obviously, as you would expect, about what's happening with elections and the governments around, especially south of us to the border here. And in particular, there's an upcoming renewal or review of the USMCA agreement, or up here in Canada, I think we call it the CUSMA agreement. Given the changing political landscape, Jim would like to know, what do you believe the most likely outcome for the negotiations are going to be there? Are you able to provide some color on that?
So before I say anything, just to provide a disclaimer, anything to predict what Donald Trump is going to do, I don't have very good prediction. Okay, so I'll try my best, but
Okay.
to talk about the trade agreement with the U.S. Uh, that basically is up for renewal this July, but it doesn't end there. Okay, so there's no termination. If they don't reach a deal, it doesn't mean that it's terminated. The contract is a lot longer, but it also has a clause that it will be reviewed every 6 years, and this is the year that they will review. There could be no changes. There could be some changes. If any party want to terminate, it's a 6 months notifications. So it's hard to say what's going to happen. I think it's going to drag for a little bit longer,
Mhm.
and Trump has a lot to worry about, including the midterm elections. I don't think he wants to be too harsh to Canadians, and given that we're neighbors, and our government does support a lot of the U.S. initiatives. So I
That
don't
hasn't hurt,
think.
to be fair, that
uh,
hasn't hurt him from being mean to his Canadian neighbors in the past, but different point maybe.
so far he has changed a bit. I think he has been nicer. He hasn't been too nice to some of the politicians in the past, but those people have left. So he seems to be nicer, and Alan Carney has been doing a great job in terms of uh, um, having good relationship with Trump, and also at the same time trying to build some new relationships in other parts of the world. So I think this is going to be a drag for a while, and there's not going to be anything a big within the next few
Oh,
months.
I think we lost you there, Alfred. Oh, you're back.
Okay.
That's okay. I think we got the gist of it there at the end. So thank you for that. You mentioned midterms. Denise wrote in and wanted to know, given midterms are just around the corner here, do you have any outlook on sort of the various scenarios that might come out of this and whether that has a material impact on the markets or the economy?
So Trump has done a few things that were not popular, including the current war situation, and his approval rate continues to decline. So I suspect that before the midterms, he is going to give some incentives to the voters. Okay, and that means um, tax cuts, like whatever he called the tariff revenue to be shared with the Americans, maybe some free cash to everybody. Don't know what's going to happen. I do think that he's going to do something, and keep in mind that U.S. is at full employment, and they are still running deficit. So the bondholders actually not happy because if you have full employment, you run deficit. When will you ever be positive? Will be on surplus, and
Mhm.
national debt is an issue. So bond yield, if you look at a U.S. bond yields, the 10 year continue to rise. I think that is basically a trend uh, until U.S. More responsible with their budget. 4.6 to 5% yield. That means there is going to be capital loss from holding that holding that 10-year bond if you have to sell it before maturity. But to keep in mind that you collect a coupon of 4%. So if there's a capital loss of 4%, meaning from 4.6 to 5, and then offset by for the 4.6% yield, you effectively break even, or you have little loss. So this is unlike 2022 when your 10-year bond yield is 1%, it goes to 4%, then you lost 10%, but you only have 1% to offset, right?
Yeah.
So I'm not saying that the bond market is going to be challenging. It's going to be look like 2022 type of challenge, but I'm saying that you're unlikely going to make a lot of money from bonds in the base case or best case scenario. And the worst case, you probably will just break even or negative. And in today's world, when markets are quite robust, like you look at S&P is already over with return of over 10%, not making any money is an issue. Okay, so
Yeah.
not making money doesn't sound so bad, but comparatively, compared to inflation, compared to your other options,
Yeah.
it's problematic.
Okay. That's great. And that actually answers my next question, which Gary wrote in with whether or not rising rates are going to be a problem going forward. How high will they get? And I guess that's a bit of a separate question, but you kind of touched on it there. So I don't know
It's
if
a
you have any
problem
additional
for
thoughts.
bonds. It's a
Pardon
problem
me?
for bonds, but probably not a huge problem for equity. Equity can stand with 50 basis point higher interest rates, no problem, because again, earnings are very robust, and the AI continue to drive very big things in our world.
Great. Perfect. So I have one more question before we wrap it up, Alfred. And Dave wrote in, I'll read it because it's a great question, I think. If the current base case that you might be seeing is moderate growth, what are some of the underappreciated risks that could invalidate that outlook? And conversely, is there some upside scenario that you think estimated or investors may be underestimating? So I think it's a great question to sort of wrap up our conversation today.
For sure. So one thing investors should remember is economy is not the same as the stock markets. Now the stock markets, the S&P, has companies that are making changes to the world. So they're innovating, they have cash flows, they're going to make a lot of money. So with higher interest rate or without higher interest rate, with inflation or with no inflation, they don't really matter to these companies. So you have to understand the economic impact, economic variable impact to a lot of these companies don't really matter. Okay, and they are big of the index. So the composition of the index makes the S&P very resilient. We saw that in 2020, right? So we had a big event, but S&P held up very, very well, and after that was able to perform because we basically fast track an innovation cycle. Okay, so number one, we have to understand that, and so if the central bank action is not going to have meaningful impact, if inflation not going to have impact, economy little impact. So are these things bulletproof? The answer is no. Okay, so first of all, these stocks tend to have a lot of volatility. So if you look at a lot of in the last few weeks, the semiconductors sector was talked a lot because it went up a lot. Okay, but
Yep.
then prior to this rally, they were flat for a while. Okay, so AI theme typically they were flat for a while and then parabolic move because people catch up to what the news about what these companies are doing, and then they got expensive, and then they flat for a while. So even though AI have been performing very well in the last couple of years, if you look at the return patterns, it actually spent uh, more time flat than rally. Okay,
Yeah.
and so you want to be careful that when it's flat, especially close to the end of the flat, and nobody knows when the end is, that you don't give up, and then you don't chase at the end of the peak, and that's why with AI, you need somebody pay attention and follow for you, because there's a lot of temptation to sell at the wrong time. There's also a lot of temptations to buy at the wrong time. So you got to be careful about that. And another thing you have to be careful about is inflation in the AI ecosystem. I'm not talking about inflation in the economy. I'm talking about inflation in the AI ecosystem. So, for example, like you may have heard that there's a lot of demand for memory, like a RAM, HB RAM, and there's more demand than supply. So the prices of RAM have gone up dramatically, to the point that Apple has announced that their iPhones will have to raise the price because of the cost they need to pass to the consumers. And you know that it is a joke, because if you think about their profit margin, I'm sure they can absorb some of that. But they want to pass it because they have like a monopoly power. So they want to pass down. And so if RAM prices go up, CPU prices go up, uh, engineers price go up, then eventually is no even there's a demand, supply becomes a bigger problem on AI. And if supply becomes a higher price, comes with a higher price tag, demand is going to be lower, right? So then you have a situation that like now demand is very, very strong. Now we have a situation there is more demand than supply, and then that dynamics can change. So you want to watch closely where this inflation continues to go in the next few months, and to assess whether this AI going to continue with the original trajectory of high growth, or is it going to pause or slow down a bit. So at this point, don't worry too much. I'm convinced that it's okay, especially when the payoff on AI could be dramatic, but it's worth watching. So it's not the same as watching inflation for the entire economy. You have to watch the AI ecosystem inflation.
That's
But
great. Okay.
otherwise, like things look great. You still have very low interest rates. You have ECB announced that they may do one more hike and that's it. And Japan has been delaying interest hikes forever. And the inflation is now back to like a bit, I believe it's a little bit below 2%. And US, they may do 25, 50 basis points. While they may hike interest rate, Donald Trump may give people more money to offset. So it's still a very positive backdrop for the next little while. And we are watching, but we feel good about the overall economy.
That's wonderful. That's fantastic as summary, Alfred. Thanks for answering that question. And it took me back to my 20 years ago to my university days, hearing some of my economics lectures on supply and demand. So nice little throwback on that one. Thank you for that. So with that, we're almost exactly at half an hour, and I want to say thank you very much, Alfred, for sharing your time with us today. I think that was an amazing, little run through of some of the key things that are out there in the markets and the economy today that people have questions on. I want to thank all of our clients as well at Legacy Family Office Private Client for sending in questions today to Alfred. And we're just so pleased that you were able to be generous with your time and share that with us today, Alfred. So thanks for your outlook, and we'll look forward to seeing you again later this year and in the coming year at another great event.
Great. My pleasure. Thank you.
Thanks. That was great. That was fantastic. Thank you, Alfred.
Okay, great.